Welcome to the Deep Dive. Today, we're taking a look at China's strategy, specifically how it's building influence relative to the U.S.
Right. And importantly, not necessarily through, direct military means.
Exactly. It's more about these political, economic, technological tools. We're kind of diving into what people call gray zone tactics. It's about the long game.
It's like that analogy you mentioned China as this sustained climate phenomenon versus maybe the U.S. is more of a passing storm, a long-term strategic view.
And that scale is massive, isn't it? China's responsible for what, about 31% of global industrial production?
Yeah, that's a huge figure. And it gives them, significant economic leverage.
So how does that translate into actual strategy? Our sources point to some interesting economic pressures.
Well, you see subtle moves. Things like counter tariffs, maybe restricting exports of certain raw materials.
Or even just adjusting prices.
Exactly. Things that can increase costs within the U.S. market.
And considering the sheer volume you mentioned, over $438 billion in annual imports from China to the U.S., those levers become pretty powerful.
They really do. And the knock-on effects, you could see rising inflation here, pressure on the Fed to maybe raise interest rates.
Which could slow down the economy, maybe even risking stagflation.
It's a possibility. And then there's the other side, the challenges U.S. companies face operating in China.
Right, the procedural hurdles, operational restrictions.
Yeah.
Adds another layer of complexity.
Plus, you have divisions within the U.S. itself on how best to approach tariff policies and trade. It's not straightforward.
Okay, so sticking with vulnerabilities, let's talk rare earth mineral.
Yes. Absolutely critical for microchips, advanced aircraft, EV batteries. So much modern tech and military hardware relies on them.
And China's position here is dominant, right? Something like 80% of global production.
Around that figure, yes. It's a commanding share.
So even just hinting at slowing down exports or tweaking prices, that could cause real disruption for U.S. industries.
Definitely. And they're looking beyond their borders, too, investing in rare earth extraction in Africa, for example. Over 30 projects, I believe.
Meanwhile, the U.S. is trying to diversify its sources. Places like Ukraine, Congo, Greenland.
Yes, but that takes significant time and investment. It's not a quick fix.
And this connects to clean energy, too, doesn't it? China's lead there is huge.
Absolutely massive. Something like 90% of solar panels. Over 3/4 of electric vehicle batteries. It's all interconnected.
So moving from materials to finance, there's this whole strategy around the U.S. dollar. De-dollarization.
Right. But again, it's not about a sudden shock to the system. It's more of a gradual, calculated effort to, let's say, rebalance the global monetary landscape.
Okay, so what are the tactics? What are they actually doing?
Well, several things. Currency swap agreements with other nations, pricing goods in their own currency, the yuan.
Evolving alternatives to SWIFT, the main payment system.
Exactly. And linking their big Belt and Road Initiative projects to the yuan, reducing dollar reliance in trade, finding ways around sanctions using the yuan.
And promoting this narrative.
Yeah.
Diplomatically. Sort of questioning the dollar's dominance.
Yes. Alongside establishing a network of yuan clearing banks globally. I think it's 31 banks in 27 countries now.
And does declining trust in, say, U.S. political stability play into this, encouraging others to diversify reserves?
It certainly seems to be a factor. Look, by the end of 2023, China's trade volume with a dozen key countries was double that of the U.S. with those same countries.
And most of them were importing more from China than the U.S.
About 80% of them, yes. It shows a shift.
Okay, what about U.S. Treasury bonds? China holds a lot, right?
A significant amount, yes. Around $750 billion. It's a sensitive financial tool.
So even just the suggestion they might start selling them off gradually.
Could raise U.S. borrowing costs and, potentially destabilize markets. It acts as a kind of deterrent.
And shifting back to U.S. companies in China, our sources mention creating a kind of unstable environment.
Yeah, through things like sudden legal investigations, maybe unexpected tax adjustments, dragging out regulatory approvals.
Making it harder to operate predictably. There's even talk of potential blacklisting or unofficial instructions to local partners to stop cooperating.
Precisely. It creates uncertainty.
Another critical area, pharmaceuticals. The U.S. relies heavily on imports for active ingredients, doesn't it?
Hugely, about 80%. And China has significant control, either directly or through India, which itself depends heavily on China for about 70% of its own ingredients.
So if China were to reduce exports,
It could have a major impact on drug supply chains, prices, the whole U.S. healthcare system, really.
Let's touch on food as well, agriculture.
Right. China's a massive player in the global food market. They can use tariffs on U.S. farm products or simply shift their buying to other countries when tensions flare up.
What are the trade figures like now? For 2024, U.S. agricultural imports from China were around $29 billion.
Yeah, about 14% of total U.S. agricultural imports. And China buys a lot from the U.S. too, around $25 billion. It's a two-way street, but one that can be strategically manipulated.
It's interesting, isn't it, how the U.S. agricultural workforce itself has shrunk so dramatically. From 40% in 1900 to just 1% today. Makes you think about vulnerabilities.
Definitely. And beyond these economic levers, there's the whole realm of soft power and technology.
How so?
Well, China offers technological and financial alternatives to developing countries, things like satellites, communication networks, EVs, often with low-cost financing attached.
Often linked to the Belt and Road Initiative, presenting themselves as a development partner.
Exactly. Plus establishing educational and cultural centers, shaping narratives.
And indirectly pressuring U.S. allies, maybe supporting lobby groups inside the U.S., attracting scientific talent.
All part of the broader strategy. And of course, we can't ignore Taiwan and the South China Sea.
Those actions are more direct challenges, forcing the U.S. into difficult choices, risk escalation, or lose political standing.
A very complex calculation. And one more, maybe less obvious tool.
Go on.
Tourism. Chinese tourism brings significant money into major U.S. cities. We're talking maybe $20 billion annually.
So if that flow were significantly reduced,
it would have a noticeable, albeit quieter, economic impact across various sectors: hotels, retail, airlines.
It paints a picture of a very comprehensive, multi-layered approach. Our sources even brought up that 1953 quote from Mao Zedong, "We will fight to win completely."
And it seems China is interpreting that now through economic, financial, technological, and diplomatic means, rather than purely military ones. Some might contrast that with a perceived U.S. focus on more immediate, perhaps side conflicts.
So connecting this all back for you, the listener, China's strategy seems very long-term, very multifaceted. It's building influence without necessarily resorting to direct military confrontation.
And that presents a significant evolving challenge to the U.S. and really the current global order.
So the final thought to leave you with: considering all these diverse tools, economic, financial, technological, cultural, what are the potential long-term implications for the global balance of power? And maybe what unexpected areas could become the new fronts in this ongoing dynamic?
Lots to think about there.
Indeed. That's our deep dive for today.